traders, welcome to the TMT stock market strategy video for Monday, June 6th. Quite an exciting day on Friday. Non-farm payrolls came out. 38,000 jobs was just produced. 38,000 jobs. That's it. Out of, I believe it was 165,000 they were looking for, somewhere around that area. Very bad, very, very weak. I believe the economy is probably, if not already in a recession, getting into a recession. It's absolutely dismal out there. However, the buyers of dips continue to come in, and they bought the dip yet again going into late morning. We had a pretty decent sell-off early on, but then once that sell-off, we're looking for that pullback, and you can see we just literally just kind of grinded higher into a low volume Friday, starting the summer months. And I just want to show you, this is what we've been doing pretty much since the 25th of May. Have gone absolutely nowhere. And what's happening is that if you really study these charts, right, you get to this point, they keep buying and they hold this area. And this is the spiders. Same thing relatively to the ES. ES breaks down, and then they easily start to push it back up to the 2100. Okay. Now, I want you to see the ES. Now, here is, let me just get the lines out of the way. All right. Now, here is the ES. The ES, electronic Globex, during the morning hours, and then going into obviously regular trading hours. Now, you can see here clearly what's happening. We've held the 2085 for the last let's say almost 9 days, 9 trading days. Here, just about here, didn't get quite here, but here, and then look what happened. 2100 here, and then again, didn't quite make it up here, but you could see what I'm talking about. We've been range bound, and they're just holding in a range. Now, I will tell you, this is not bearish, it's bullish, but with a lot of manipulation going on. So with the 38,000 jobs that were just created, it's a little nerve-wracking to understand and try to figure out. All right, so where do we go from here? Do we break out higher? I mean, anybody in their right mind would not buy this market at these areas. However, since it's all driven by the algorithms and HFTs, you have to kind of realize, well, wait a minute, it could easily push up there. So, should you get short? Should you not get short? Well, that's based on your trading plan. I will say a word of caution that if we do take out the 2106 on volume, okay, last week was, mind you, the weakest in volume for the whole year of 2016, the worst as far as volume is concerned. And we continue to stay range bound. Okay, so that means what? We're holding the upper end of the range, bullish. We don't break 2085. They continue to hold that bullish. They run them back up to 2100, bullish. But the economy is deteriorating, right? So maybe the Fed doesn't move in June, they move in July. Okay, wow, that's great, but they're still going to move. They got their backs against the walls. I would not surprise me if they move in June. However, we go with what the market participants, the big guns, are telling us. So we got to follow what the trend is. And I am extremely cautious, guys. I believe that at one point in time, and I don't know when, I thought it would have been during earnings season, I mentioned, but you can't call a top here because the top is not in place yet. You don't know. You just don't know. You got to follow your technical analysis overview. And I do believe that there's a very good possibility that we can break to new highs on this dismal report, which is insane. If I was any type of a manager, I would be reducing my long exposure because I know it's coming. There's a correction looming in the wind, and if it's, I wish I could tell you the time because it's not. I don't know the time. I don't know when, but we have divergence forming. I heard a lot of people, going through the internet, and I'm watching Bloomberg and Fox Business News and CNBC, and you get some of these people. Oh, the internals are doing just fine. They're not doing fine at all. I'm just showing you a couple because we have a short video, and I'm going to show that to you right now. Okay. So we have the VIX, and this is not an internal, but I want to show you that when you get very complacent, where this market is extremely complacent to the long side, not even worrying about buying the market at these areas with a dismal report, you have to be cautious here, okay? VIX at around 12 and a half, 13. Yeah, can it break lower? Absolutely, but you have to watch out for an explosive move to the upside. And the VIX is telling us to watch out. Bollinger Bands are tightening. You have to be very, very cautious here, okay? Next, stocks above the 50-day moving average. Does it look like, excuse me, that stocks are participating in this rally? Absolutely not. Not even close. Look what's happening here. On the move up from the February lows up until here, what's happened? Nothing. And then do we see this next move up that we had here? Um, just currently in this recent rally, we're not even close to 90%. We're at 69%. So stocks are not participating. Some stocks are not participating. And again, I've shown this to you before many times. And you could see lower lows, lower highs as this market is going to the upside and challenging the highs. Right? We're here from here. Well, it's not even close to being here. We're way down below. Okay, making lower lows and low highs, not a good sign. And that's just two on the free video. On the premium video, I lay out a big groundwork extensively, guys. Check out the premium video. I'm actually doing an update on gold, on the special edition videos, the bi-weeklies. Check that out too as well. All right, let's run right into it. Spiders, you can see here. Um, Not saying that this is bearish. However, you gotta watch and you gotta be prepared, because if this market decides, and you can see here inside days, and now we have a doji, which dojis does not mean doji anymore. Indecision. Okay, dojis to fool the masses, and I'm telling you right now, we talk about this in the dark pool trading room as well, and we have that. We have our um, program that we use with the dark pools to mask out what's going on internally. Something you guys might want to check out. But if you see, we've inside day, we have a doji. It's going to be one way or the other, guys, and not because of the indecision candle, but it's because that the markets have not broken down. I have to use caution, because if we do take out this high on volume, we could explode higher right to 2200, believe it or not. And then I would probably start looking for a local top. But if we either have to break out and then fail the breakout and start to move lower, and then that's the capitulation I'm looking for. Or, again, we break out, we flag, we make a higher low from the lower end of the doji, and then we go higher. And then the top's not in yet. Remember, the markets are made to fool the masses, and right now they want to get everybody, meaning smart money, hedgies, they want to get everybody long so they can continue to sell into this rally, okay? Next, and I know this is a longer video, but I want to just show you 15-minute chart. You can see we're sideways since the 25th, since that gap up. And those gaps will get filled. Remember, mark my words, they will get filled. Not a time frame, though, but they will get filled, okay? Yeah, you took an explosive move up on gap days. As a matter of fact, so on gap days up, eventually it's going to come back down again. It's going to revert back down to the trend, okay? So 15-minute, you could see for the day trades for the last 8-9 days, it's been horrendous. 60-minute, again, up at these levels, holding in here, okay? Something's going to happen. And don't anticipate. Let it happen first and then follow what the trend is. It's the easiest thing in this crazy market, the easiest thing that you can do today. Okay, you can see transports here. Here's our leader not leading. Okay, lower high, lower high, lower high. Okay, so that's what's going to happen. So remember, um, do at least yourself a favor and follow your plan and keep your stops very, very tight until this market starts to capitulate to the downside, or we break out to new highs. And you can see here IWM's tons of overhead resistance, but doing quite well, as you can see on the daily chart. Exploded up higher on basically unknown news. Just crazy stuff. And lastly is the Q, as you can see here, doing the same thing. You can see the lower wicks. You can see here, right here, they're holding this market up. So remember, guys, they meaning smart money, hedgies, they're not going to let this market go down until it's time to go down. Don't fool yourself. Yeah, is it okay to be short a little bit? Absolutely, if you got the funds to do so. Remember, manage your account accordingly, all right? Hope it helps, guys. Have a great day today, and we'll speak to you tomorrow. Take care.